Tuesday, October 24th, 6:33 p.m. New York time. Good evening. This review on a swing trade I took yesterday. A swing trade means you're in a position longer than 1 day. It may be 2 days. It may be 5 days. It may be 3 months. My swing trades are typically under 45 days, depending on what financial instrument I'm using and what my interpretation of the market is. Looking here on the equity index, SP500 cash index, symbol SPX, Sierra Papa X-ray, on a daily chart. Each of these candles represents a day. So this green candle was today. It closed green. It made a higher high than yesterday. Made a higher low than yesterday. So that's a trend up. First, here, it was making lower highs, lower lows. That was a trend down. This red candle, big body, almost a solid body, a little wick on the top. Big body. That was very bearish because that kind of candle forms, right? Labeled midpoint right there, that red line going horizontal. And then Monday, we had this price range occur. This green candle, the high, the low, the body. The body is bearish because it closed below, well, the candle is bearish because it closed more than 50% below the trading range of its own candle. But it was at the bottom of a trend. That line going down is a trend. That was a bearish trend. And because it went up during the day and tested midpoint of that candle, there were buyers showing willing to go up there. As well, there were buyers stepping in down here, defending this big round number, 00, 4,200. So my thought process was, okay, I'm going to watch it near the end of the day. I'll show you momentarily intraday chart. And I think that, yep, we're going to have a follow through on the next day, which occurred today. And look at the body here, or the candle. We close above midpoint of the candle. Look at the high and low of the candle. Midpoint is here, the middle of the candle. We closed above that. So that kind of candle is bullish. Plus, another thing that shows is bullish, it closed above the prior candle. The candle closed here that Monday, but the high of the candle yesterday, we did not close above. That's concerning. I'll get to that shortly too. Again, that's concerning that there may not be enough buyers on this side of the trade. There may be more bearish bias still. Now we're going to go on intraday chart. This is a 30-minute candle, and it's 2 days. Up here on my top left on this desktop trading platform called Thinkorswim. It says right there, the stock symbol, it's in the queue, top left, Sierra Papa X-ray. That's the stock ETF of the cash index I just showed you. This is the cash index, SPX. Trades 9:30 a.m. to 4 p.m. New York time. And now I'm looking at the stock ETF there. So 2 days here, we're looking at 30 minutes. This grayish area, that represents extended hours. And the dark areas, right here, those are primary trading hours, 9:30 p.m. to 4 p.m. New York time. So yesterday, I just showed you the daily candle. So yesterday, when I was looking at that daily candle, I was waiting till near the close of the day. Right here. I was looking at 3 o'clock, 3:30. Yeah, so here, this big red candle, that was a dump. That was at 3 o'clock to 3:30. And beginning in the morning, it was very bullish. I had to run up and pull back. So again, my thought was on that price activity on a daily chart, as well as you can see here in the 30-minute, I was bullish bias, willing to take the risk. The risk because, again, bottom of a trend, we had a green candle forming, potential reversal. I'm not looking to go to the heaven that I think is going to go become a rock star. Nope. I was thinking some kind of price range that's expected in this financial instrument. Different financial instruments have daily ranges they move in, and there's some that move outside that range, inside the range periodically. This is my go-to trading product, so I understand it very well compared to many other financial instruments. So that thought was, yep, I'm going to use options that expire the next day. So I put a bullish trade on using options, that advanced bullish option strategy called bull put spreads. It's a credit spread. I selected options that expired in one day. So I bought them here, and one day would mean they expire the next day. Again, outright, let's say the 101 beginners class, most only know buying call options to make money on the upside. And if they're bearish, they buy put options. Well, again, this was advanced strategy. Give me a credit spread, collecting income up front. Like when you pay for your auto insurance, home insurance, health insurance, you're paying a premium to the person on the other side of the business, the trade. Well, I'm the one that was on the other side of the trade collecting the money. Yep. So I collected a credit. So I was bullish. And I selected the strike price that's up there, this yellow horizontal line. 426 strike right there in the end. And the delta was 74. It says right there, again, I drew this 24 October expires. So I bought it here, placed the trade here, expired here. And at that time, it was a credit of $61. Going forward, you can see today, we opened up 9:30 here, higher than that closing of yesterday. Each of these 30 minutes went higher, another one. And then 10 o'clock here went higher. And I closed my trade there. Yep. I was happy with the profit. Again, I know things like this occur up and down. I don't want to lose a trade. And again, it was a swing trade. I'm not buying, holding this for 15 years, 10 years. It was taking a reasonable profit. And I was a happy camper because I made more money in the profit than I'm making in a bank. Yep, closed it. Thank goodness I closed it because later on it went down, back up. Yeah, but again, below. Never tested my strike, the short strike, 426. So let me show you what I did here. This was a more, not just an advanced trade, but a higher risk one because I need more things to occur. But it occurred. It worked out what I wanted to do. Yep. Go to the trade tab, the option chain, because this financial instrument has options. And this financial instrument being a Sierra Papa X-ray, SP 500 stock ETF, it has options that expire every day. It's a beautiful thing. Not all stocks have options that expire every day. So you're looking at today here, the close. Again, it says 24 October. That means it expired today. So right there, it says 0 in this parentheses, 0. It's done. It's closed. The one that expires tomorrow, one trading day right there, 25 October. Got it? Parentheses tells you how many trading days, not calendar days, trading days. And here. So again, here on the side, so puts. And you're going to see the strikes here. Again, I selected the 426 strike. And these deltas no longer valid here on the right. But just go back to the chart, show you. At that time, when I put this trade on, the stock was approximately $423. $423, the stock price up there, we're closed up here. So I put the trade on. Like I said, the stock is around $423. And I chose a strike, 3 strikes away, 3 strikes higher than what the underlining was. The underlining being the SPY, that was the price. But I didn't necessarily need the stock to go up to that strike price. If it did, goes up to it or higher, that would have been even better for me, but it didn't go up there. It went up here, just shy, early in the morning, just shy of 24.25. First here, it ended up going. Yep, so it was a profit. It was a winner. Good job out of me. Happy camper, better than losing. Now, we're going to look at the S&P 500 futures. S&P 500 futures trades on a different exchange, different margin requirements. Still, it's the S&P 500, but it has different margin requirements, different exchanges, and not all brokers give you access to the futures. So again, I choose to have brokers that give me access to all the financial exchanges, instruments I want to trade. Again, the futures, the continuous contract, ES. ES. I'm again showing this for charting purposes. /ES. Looking at 15-minute chart. So this was yesterday, just like the S&P 500 stock ETF I showed you. But here I'm looking at the extended hours because the extended hours is what I'm focused on if I want to add to this position. And of course I didn't because I'd already shut down. But what happened here was, see this? This is the Asian session. This is the London session, and of course the New York session. When I when I opened up my computer this morning, logged in, I'm seeing this pattern, and that's good because this was the close of yesterday on the S&P 500. And when I saw the Asian session, I'm thinking, okay, maybe I'll reload more positions if it comes down. Again, I didn't log in. When was this Asian session was strong. We didn't take out the low here. That gets done in between the Asian session and London session. Well, the London session did a retest into the Asian session. We also had a higher high and higher low. The momentum was to the upside. So when I logged in this morning, thinking, nice, we may have a gap up this morning. Maybe we'll have a gap up. We did not have a gap up this morning, but it still worked out for my trade. Yeah. So you can see similarities here. This is the 15 minute again, where the other one I'll show you in 30 minutes. Now let me show you some other things here. I'm going to go to the daily chart of the S&P 500 futures. Again, you see prices moving because the futures are open right now. Yep, you can trade them right now. This is the daily chart, S&P 500 futures. And currently the price action has not taken out the higher low the prior day. Prior day being the one that closed today. Right there, that green candle. In the futures, it closes at 5. The equity market closes at 4. So we have this trend down right here. And then we have this trend up here, which is a retracement. And I'm thinking, yeah, it may not have enough. Again, like I told you, the momentum, the strength of buyers to want to bring it upside. So it may continue going down. Yep, so I may be looking for, well, not maybe, but I'll be looking for a possible entry to trade bearish. Do the inverse, what I did. Give you a little more perspective here. Big candle down. This green candle, big wick on the top and bottom, almost like a doji. The bottom of the trend actually might be halfway down. Indecision. Yep. That trend down and that kind of candle that formed there, that often means a reversal or halfway down. Well, we had a reversal here. It looks like it just, again, big wick up there. Sellers. Suspicious. So maybe we'll get a retest one more time of here or up here. But we're in a consolidation phase here too. So I'm looking for some kind of trade signal. Or we may have that break on the downside. Just like the trade down there. Do Fibonacci here. Fibonacci. From there to there. Yep, that green candle. Just shy of coming to 0.382 there. And there's the 0.618 right up there. 0.618 at the bottom of this consolidation. That's interesting. So potential areas on the upside. Maybe I'll keep this open here. Now I want to take an intraday on the 4 hour. On the, again, S&P 500 futures on the 4 hour. What's been occurring since last Friday? Well, last Friday, we had here a dump, a sell-off. You had a consolidation. This was Thursday. Last Thursday, a dump, consolidation. That consolidation was here midpoint, this big green candle. Broke below it. Trend down. Sunday evening, lower. Monday, pump. A lot of buyers stepped in there. That was interesting. And then you have that dump, but then to take out that low. So nice demand zone down here. Quarters. See this? The last two numbers, 25. Quarters. 42.25. Currently demand zone. Well, here today, we have these two candles, big wicks on the top, above quarters, 42.75, but rejecting it. So we have rejection up here, sellers up here, supply zone, sellers up here, and demand zone down here. It's tough to make a really defined read on this. So what I'm doing is labeling zones. Again, supply zone of sellers. Why do I say it's sellers? Well, look, price action up there, sold off, price action up there, sold off, price action up there, sold off. So potential sellers up here, potential bearish trade out there. First down here, we have buyers stepping down here. So demand zone, potential buying zone. And again, I can use these for my swing trade as well as day trade. What I look for is a trigger in these areas for taking the trades. Triggers I use are candles. Very interesting. We'll see how this plays out. Yep. So we'll put this back on the daily. And when I cue this into the weekly time frame, I know it's only end of Tuesday. But again, to me, it's important to look at multiple time frames for situation awareness. We're looking at the weekly charts. Each candle is a week. The current candle is not done yet. It's only representing from Sunday to now. Look at the current candle. Yep. So this current week here, which we are now, did break below this low of October here. Interesting. I should label midpoint that big red candle too. Let's do that too. Again, down here on the weekly, you can notice it's demand zone of buyers. What I'm do now is label midpoint, that big candle. But I'm only labeling the midpoint of the body, not the whole range. The wick up there is the top, the bottom candle, the bottom down here, but I'm only, again, labeling the midpoint of the body. I like to use red for midpoint on all my time frames. So I'm going to label it midpoint weekly. I need to fix that again. What was I thinking? Shame on me. I forgot. New week. Let's remove this. There we go. Update that. Okay, good enough. So again, just see midpoint there. Potential area on the weekly. And I want to look at this on the weekly on the SPX. So again, this is the cash index. Q in the weekly. There we go. Yep. So again, on the weekly, we can see the trends going down. Same here. And leave this here on the 4 hour on the SP 500 futures. And I set my alerts at these quarters. Get push notification. There we go. Alert there. And this product trades all night long to the next morning. It only stops trading from the 5 p.m. to 6 p.m. Then it reopens. Potential trades I could take tonight. Having an account with a broker that gives you access to the futures market. That's it for this video. Thanks for watching. If you want to get the real-time access to this, the link is below to my Patreon account.